Hello everyone, hope you're well, and now that we went over Fibonacci retracements and Elliottwave, we can now combine the two and add a third element to the equation. And this element is Fibonacci extensions, because Fibonacci is not just a retracement tool, it's a lot more powerful than that, as you will see in this video. So without further ado, let's get started by drawing a sample Elliottwave. Now let's do a quick recap of the previous lessons. Recall that you can always take the fib retracement of the first wave, you can take the fib retracement of the third wave, but you cannot take the fib retracement of the fifth wave. Instead, you have to take the fib retracement of the entire structure, and you can do so next to the structure so it doesn't clutter your chart. And lastly, recall that if the first wave retraced to the 0.5 and the third wave retraced to the 236, it is likely that the final wave, the total wave structure, will retrace somewhere in the middle around here. So now let's get rid of this and let's introduce Fibonacci extensions to the equation. You can reach Fibonacci extensions over here, right next to where you pick your fib retracement. It's over here. Feel free to start it and put it here where you can move it everywhere. So this would be the first wave, and if we take the retracement and place a retracement somewhere around these lines. So now let's annotate three key areas on these lines. Over here is point number 1. Over here, point number 2. And over here, point number 3. So this is how you do the extension. So you grab it over here, and then you click on point number 1. You then click on point number 2, and you drop it on point number 3. And you can drop it here, you can drop it here. It does not matter as long as it's aligned. So you can drop it right here, and there you have it. We have these numbers here, and what do they mean? These numbers are movements of the next wave. So this 0.786 right here, what this means is if it reaches this level, if the third wave does exactly like this to this level, that means it did 78.6% of the first wave, meaning it was smaller by 21.4%, okay? If it were to go here, that means this is an exact replica of this here. And let's see if it is. Let's grab this wave, copy paste it, and see if it matches. It's an exact replica of the first wave. That's what we call a one-to-one extension. So then, if this wave were to make a move all the way here, that's what we call a 1618-to-1 extension. Recall that the third wave is often the longest and never the shortest. Therefore, it is acceptable for you to target the 1618 region. So then, you take your fib retracement tool and you see where this one will hit, right? Because this one retraced to the 382, this one is likely to retrace a little lower. So you take your line here, and let's suppose that it retraced to the 618. So now you can see that this holds true because it holds the 3 rules of Elliottwave. Wave 3 is definitely not the shortest, and it's often the longest, right? Rule number 2, wave 4 does not enter wave 1 territory, and it does not. This right here, that's wave 1 territory, and it comes nowhere near it. Lastly, wave 1 does not fully retrace. So obviously comes nowhere near here, so Elliottwave stands and it holds. We then take our fib extension tool, then we click here, here, and we drop it here, right? And because we always target the 1618 on the third wave, we must target a one-to-one extension for the fifth wave. So now let's take a look at some examples of past trades of mine where I traded exclusively on Elliottwave and Fibonacci. Alright guys, so for this example on the Elliottwave trading, I'm here on Bitcoin's 2-hour chart, and this is between February and March, and this is when Bitcoin was making a double top right here around the 11.8k area. And this trade was a very memorable one, and I'm very excited to share everything with you because, as you will see in a minute, it was quite the profitable trade. And I want to show you step by step my line of reasoning and every move I did on this trade. So let's zoom in a little. And I totally missed this move down, okay? I totally missed it, but I wanted to enter the market, right? I wanted to short this. And as you can see here, there's some clear support right around this area. So we can place a support line right here. So then I wanted to enter it, but I didn't enter here or here. I'm a very cautious trader. I don't like to take unnecessary risks. So here, I wanted to see a clean break of this support, and then I would enter, right? And as you can see here, the market reacted to the support line, right? It had a little bounce here. And now that it did, and now that it broke through it, you can clearly see that this was indeed wave number 1 of an Elliottwave 5-wave impulse down, right? So then this had a retrace, because remember, this is on the way down. So a retrace will actually be moving up, right? Once this broke, this is where I entered the market, right here, with a stop loss right around there. So now that we have this here, let's take our Fib extension tool and see where the target is. You take one click here, another click here, and then you drop it right here. And because this will be the third wave of the structure, the third wave is often the longest and never the shortest. Therefore, it is very reasonable to place a target to the 1618 region. And as you can see, that target played out beautifully, all right? However, I am a very cautious trader, so I also took a lot of profit at the 1-to-1 extension. I'm always telling you that before you enter a trade, you need to know two things. You need to know your stop loss and you need to know your target. So then you can grab your risk management tool, and in this case, we're going to grab the short position. And I entered the trade right around here, right? And my stop loss, like I said, was somewhere around here. And I was targeting the 1618 region, so my target was here. This allows for a handsome 2.8 risk to reward ratio, and I'll take those any day, right? So I took it, I took profit here, and I took majority of profits there. But that's not it. That's just the first part of a two-part play. And bear in mind, this is already a 16% trade, right? So then, now that you have a bottom established, and let's get this cleaned up a little. This bottom was established, so then you can draw the third wave, right? You can clearly see that this was the bottom for the third wave. It then had a very high retracement, which allowed for a very handsome second trade. So now that you have the bottom of the third wave and the full top of the fourth wave retracement, you can then take your Fib extension tool and calculate where the target for the fifth wave is. So because you just targeted the 1-to-1618 extension for the third wave, you're obviously going to target a 1-to-1 extension for the fifth wave. So this is the target, and look at that, it hit perfectly, right? And because this was such a long retracement up, this allowed for an even better risk to reward ratio. So I entered my trade right here, and I placed my stop loss right around here. So now we know that, let's take our risk management tool and see what risk to reward that would give us. The stop loss was somewhere around here, and my target was at the 1-to-1 extension right here. So this allowed for a 4.73 risk to reward ratio. And this is all that trading is about, is finding these high probability, low risk setups. So here I was risking 4.37% of my trade for a possibility of making a 20.7% trade. So then I closed my profits at 1-to-1 extension. So this then just made the 5-wave structure down. So it was pretty obvious that there was going to be some bounce up, right? And look at that, we had the beautiful bounce up. Now, I did not play this because I am a very conservative trader. I do this for a living and I'm not greedy. So I didn't go and chase this long here. I definitely could have. I had more than one reason to enter this trade, but I just got out of two very lucrative trades and I was quite happy then. I do not regret not chasing this long. Always control your emotions. The market is open 24/7. You have no reason to be entering every single trade. All that's going to do is add more stress and unnecessary risk into your life, right? Alright guys, so before we conclude this video, I actually want to show you a very interesting example of how I just made a couple of very successful trades just based off of Fibonacci and Elliottwave. So if we go here to the say 2 or 4 hour, and I talked about this, that we made a higher low, right? You can safely assume here is that these were 5 waves, right? It's very easy to see now that these were 5 waves like this, right? So let's pretend that we're still here, right? We're still where I have the cursor on. This is all new data. So let's put a little rectangle over it, and let's assume that we have none of this available to us. We just have a local bottom here. So let's play accordingly. So now you know that the wave began here. So we will see to what level did it retrace to. So you grab your Fibonacci retracement tool, you move it exactly like this, and look where it retraced. exactly the 618. You see that? So now that we have this, grab my trend-based fib extension, click on the very beginning of the first wave, tap at the top of the first wave, and drag it down to the very bottom of the second wave retracement. Recall that wave 3 is often the longest and never the shortest. Therefore, it is safe to assume a target between the 1-to-1 extension and the 1-to-1.618 extension. So now let's assume that we already have the outcome until here. So what do we know so far? We know that we had wave 1 do this. We then have wave 2 do that. We calculated to precision where wave 3 would possibly go. And I will say this again, I'll always keep saying this. Wave 3 is often the longest and never the shortest. So a target between a 1-to-1 extension and a 1-to-1.618 extension is very reasonable. So assuming that we have information until this line here, we already spotted a local top, which would be somewhere around here, which was practically the 1618 extension. Now recall that we have said before that if wave 1 retraces to the 618 region, you can expect wave 2 to retrace less. You grab here the Fibonacci retracement tool. You put it from the beginning of wave 3 until the end of wave 3. And you see where it retraced. And I will say this again, wave 1 retraced to the 618 region. Therefore, it is acceptable to think that wave 3 will retrace less than that. So that would be between the 236 or the 382. And look at that, it retraced pretty much exactly to the 236. Therefore, you can safely target a 1-to-1 extension. So now, you grab your Fibonacci here, you grab it from the beginning of wave 3 to the top of wave 3, and right where it reached. So here, you didn't quite get to the 1-to-1 extension, but you got to the 786 on the dot. So now, you already have the bottom here of the fourth wave, and you have the top there. So there you have it. Now you have a 5-wave complete structure. Time for a retracement. Remember, you can take the fib retracement of the first wave, you can take the fib retracement of the third wave, but you cannot take the fib retracement of the fifth wave. That is wrong. So what you can take now is the fib retracement of the whole structure. So it began right around here, and the top was exactly there. So now we want to see how far does this reject to. I have made my opinions on the midterm conditions of Bitcoin very clearly on Instagram, but I will still play this. We are currently not even at the 382. I would expect a bounce right at the 382 or at the 05. If it comes down to the 618, you can expect this to fail. I just gave you a clear as day example, and please feel free, and I encourage you to rewind this video and go back and see step by step how beautifully textbook this played out to be. Alright guys, I'm going to wrap up this video. I hope you've enjoyed the course so far, and I'll see you in the next video.